Okay guys, welcome back to Crypto Harmonics this Monday morning, August 21st. I got to get this video out there so I can go watch the solar eclipse later. Pretty excited about that. Yeah, so I just want to shoot this video. This is going to be the last video that I shoot on this channel without my face on it. Sorry for the pause there. I got a webcam coming. And cause the webcam on this laptop I'm using it sucks. So I'd like to do some decent quality at least for you guys. So that's coming. So I'm gonna put my face on here. It'll be a little more engaging for you, and for me too. I like sometimes if I ramble on about something, you're just staring at my screen. I'd like to be able to actually look at you while I'm talking to you. So anyways, this week I want to do something a little different. I'm going to actually talk about the bat pattern, and I'm actually, more than that, I'm going to teach it in depth, as in depth as I can go in a 20-30 minute video, showing you how I look for it and what to look for, and what's some bad ones and what's some good ones. And it's just going to be trial and error for you guys. That's how it's been for me. I've been specifically trading patterns for about 4 or 5 years now, and it's just, for me, there's no other comparison as far as trading goes. There's just no other comparison. So anyways, one of the things I want to look at is, let's look at something just recent to begin with. Let's look at this Bitcoin here. Okay, so for most people, when charts go into consolidation, what's called consolidation, where you just see it bouncing around a lot, right? There's no real trend to it. Believe it or not, Bitcoin has had moments of consolidation. For the most part, it's been a trend pretty much up, at least this year. But there is some consolidation. And so this last week, right, we had consolidation. And we were looking for maybe some coins that would get us some gains, thinking that Bitcoin might hit a little bit of consolidation after that nice move up. And that's kind of the cycle of things. It'll move up and consolidate, move up, move down, you know, just that's how it works. So most people, as far as trading goes, don't particularly like the consolidation time because they just don't know. They're like, is it going to break down? Is it going to break up? I love when consolidation happens. That's when I make the most money, believe it or not. Yes, I make money if I catch a trend, right? But that's not my play. My play is picking 5, 10, 15, 20% out of the market through these patterns in what's seemingly chaos. So you got this whole consolidation right here over the week, okay? And I'm just using this as an example because this is a recent thing. I'm going to look at a lot more examples and really better examples. This isn't the greatest pattern for me. What I like on my initial leg up, okay, is I like a clean move up. Like this right here would be considered more of a clean move up, and then a breakdown to the 5-0 retracement. Like this right here, this is a clean move down and a break up. But let me show you why I didn't. Let me look at this real quick. So what you want to do is, if you have trading view, you know, you would go over here to this XAB CD pattern, and if you have Coinigy, obviously it's the same template here. Coinigy is awesome. I talked about it in the last video. But if you don't feel like spending the money on Coinigy, although I think they have a free, you can do a free month, just go to TradingView. They have some of the majors. The reason I stopped using TradingView is though they don't have like Bittrex and the 900 other altcoins that I want to trade, because with these patterns we can make some good money off of them. So okay, let's look at this. You want your first leg down, right? So you want to grab this tool here, and you want to go to the highest point of this leg, X to A, to the lowest point, not the body, but the lowest point, okay? And then you're looking for a 5-0 retracement. which I got right here, and it broke back down. If you see that, got here, came back down, but then it made this, and this was its retracement, which was a 618, which is not a bat pattern for me. That actually becomes another pattern, which I can talk about later. But that is why when it came up into this 886, you see it hit and pulled back, but it failed. This was too strong of a move up. You're always looking, this is really based on price action movements. It really is about, there's a book called Trade What You See, and it's such a, it gives such a clear, concise way of really the simplicity of trading patterns and different things like that. I don't think he talked about harmonic patterns specifically, but it's the same premise. It's saying, you know, look, the charts are not going to lie to you. Trade what you see. Price action, these candles show you what traders are thinking and more importantly, what they're doing. And so for me, this is too strong of a move up for a bat pattern. This would be a different pattern, which I won't get into right now. And if you see, it came down a little bit, right? But then it ends up going up, and you know, if you've been watching, all my stop losses are above or below X, depending on what the pattern is. And look, this probably would have actually taken me out and then fallen and gone the right way. So that's like the most frustrating thing that can ever happen, is it takes your stop loss out and then actually does what you thought it was going to do. So anyways, that's why that didn't qualify for me. Here's one that did qualify. If we look at this one, it's not all bat patterns are going to be beautiful, right? They're just not. They're just not all going to be pretty. But this one is the start after this leg, right? I'm using this leg up now as my X to A, my initial leg, X to A, and I move that all the way up there, okay? Now I'm looking for a 5-0 retracement. And guys, you're basically taking what the market is giving you. If it gives you a 5-0 retracement, you're tracking it, right? If it doesn't give you that, you don't care. We have patterns that a 382 retracement will end up being a pattern, a 5-0 retracement, a 618 retracement, a 786 retracement, and even an 886 retracement. So we got patterns all over the place, but this specifically for the bat pattern is what we're looking at. We're looking for a 5-0. Now listen, if you look specifically for a 5-0 and you say, I'm not taking it unless it's exactly 5-0, you will probably take one trade a year. Because it just doesn't happen that way, right? So you need to find a range. For me, anywhere between the 0.45 to 0.55 is acceptable. Give yourself a little room to work, right? This one actually hits like on 5-1, which is really close. So then that's your C point. That's your middle point right there. And that's going to end up being important later when we take targets, okay? So then you're going to go B to C. And all this retracement needs to be, this retracement is not very specific, right? It just needs to be enough of a retracement in between like a 382 and an 886 retracement. Somewhere in there. Sometimes it can be a little bit past, but if it breaks this A point right here, it's no longer valid. It becomes an invalid trade for me and it's off. Okay? So I just am looking for, and you want to go to the highest point, not over here, but right here. This was the highest point. Okay? Then what you're going to do is, and that's your B to C. I'm sorry, I think I said C point was middle earlier. That's not right. It's B. Your B point is the middle, and that's going to be key for targets. So that's your B to C leg up there. C to D is your final leg, right? And your D point is your entry point. That's going to come, and so what you're looking for now is you're looking for this to come down. It's going to break B, and it's going to act like it's going back down to X. But you're not wanting it to go all the way to X. You're looking just for an 886. if you're looking at that number there, you're looking for an 886 retracement. There we go. Boom. So you're buying. And if you've been following me for a little bit, you'll know that I front run everything. And you'll see as you go, or you may have already seen, it's good to front run because, you know, you don't want to miss it. You don't want to front run like crazy amounts or anything like that. But you also, you know, especially on this trade, it's like it went up so quick within a matter of hours and hit our target that, you know, that would have been frustrating to miss that because you were sitting right here or something. This one actually looks like it hit right at the 886. So, okay, so we're in right here. Okay, and that's our kill zone. That's where we take our target. What I love about these patterns, right? This allows me to see this. Say it's coming down right here, right? I see this. I've got stuff going on, right? I can't sit in front of the computer and, you know, wait for it to come in and then click a market order. I'm going to set a limit order. And if you guys don't know how to do that, we'll do another video with that. But most people should by now know how to set limit orders. And I'm setting a limit order. I know exactly the price that I need to set it at. So I'm setting my limit order at 39.27 for Bitcoin. And if it comes down there, I will be buying Bitcoin. Okay, so that is my bat pattern there, and I'm not going to get completely into targets right now. I just want to show you how to identify them. But you will notice as we go through, the B point is one of the greatest targets you can take. It will hit this B point, gosh, 70 to 80, let's say 70, let's be conservative. Let's say 70% of the time, right? And you want to front run your B point as well. So right there. Good trade. So you can see this candle. So we got in on this candle right here, and it went straight up, which is number one. That is a great sign. What you want on your initial candle, on your candle that you enter on, that's what you want to see. You want to see a wick, and you want to see a move up, a green candle. It doesn't have to. It's not always going to be like that, and doesn't mean that if it doesn't do that, it's not going to be a good trade, but that is a good sign usually. So it kind of falls back down, and then it has this big move up. So 1, 2, 3, 4, 5, 6 hours, and we're out. And we made, that went from 39.27 to 41.35. So what is that? That's 73, nearly a little over 200 bucks on Bitcoin. Let's find out if we were trading one Bitcoin. Let's find out percentage wise what we would have made there just by going all out there. 5.29%. Crazy, right? I mean, this is you made you made almost 1% per hour that you were in this trade. You were in this trade 5 or 6 hours. So I hope that you guys see the powerful, you know, probability really that it puts on your side as far as being able to mark some of these places that, you know, I mean, you'll put these prices on here, and if people aren't seeing the patterns, right, they're like, how the heck did you know to get in right there? How the heck did you know to get in at 39.27 when the lowest it went down to 39.11 and then bounced straight up? So that's the power, I think, of harmonic patterns, is being able to see the market in a way that a lot of people will not see. Okay, let's look at another pattern and another example of picking that initial leg. If you're wondering, okay, but how do I, because this initial leg is key. It's very key. So how do I know which leg to pick? Which one's valid? Which one's not? Let's look at that. Okay, this is an example of picking the first leg and how you want to look at it. And this is just, you know, trial and error, going through the process of doing this over and over again, that I kind of figured out, wait a second, that first leg is crucial. So you know, let's go over here. Okay. You can see this is a leg down, right? But if I picked this right here, that's also a leg down, right? It's got a little retrace. I'm just using, this isn't a perfect bat, but I'm just using this as an example. And then you got your 886, right? And that's a great trade. You ride this sucker all the way down, you short it on Poloniex, and it goes all the way down, past the end of the pattern here, which is a great trade. But would I have taken that? Would that be my pattern? And the answer is no, because I have to start this up here, right? Then it becomes my 886 is up here now, which you see it didn't come that far. And you're thinking, well, the pattern you just showed at first actually worked, but this one didn't. Why wouldn't you just take that one? And it has to do with my stop loss. So this right here, this pattern right here, okay, this is a great trade in hindsight, right? But where's my stop loss? I love putting my stop loss right behind or above, X there. But I can't put my stop loss here because you see this run up right here. I'd have to hide it behind that thing, which puts a huge stop loss on my pattern here. So my initial leg, my X point, and this is the whole point of this, my X point needs to be a place of pretty good support or resistance. In this case, it would be resistance, right? Because that's as high up as it went. It got resistance right there and fell back down for this leg. Came back up, comes down, and then I'm looking for an 886, knowing that, hey, it hit really good resistance right here. I like the odds of it falling down, at least to the B point. So I hope that makes sense. Whereas if I'm right here, that's not a very good place of resistance. Yes, it came up here and fell. And yes, this does qualify as a pattern. And yes, it did work out and make a ton of money. But the reality is, for me, I'm looking at, you'll do this, 10 times, and if your stop loss is that big, you may end up being break even. So for me, I'm looking at this thing like this, knowing that if it comes up here, right, I've got a greater risk to reward. My risk is over here, and my reward is all the way down here when I get an entry right here, which is 2 or 3 to 1 risk versus reward ratio. I hope that makes sense on the initial leg there, because it is important to know how, that starting X point needs to be a good place of support or resistance, whether it be a bullish or a bearish pattern. Okay, sometimes patterns are just ugly. Some of these bat patterns are sometimes just so ugly, but they work. And you just have to decide as you go through, like, what works for you. Do you need it to be pretty? Do you need it to look a certain type of way in order to trade it? I sometimes am like that depending on what I'm trading. But sometimes, especially with some of these altcoins that don't have a lot of volume, the charts can be kind of ugly, right? This is ugly. Like, this has a decent move down, but then it kind of comes up again. Where's my B point? Where's my middle point here, right? I'd like to see this come down, make a nice little move up, come back for retracement, and then move up. This is just it's kind of, way over here. My B point's way over here. Then it comes down, it shoots up really quick. But let's look at it. We go from the top here, X to A to B, over here, B to C, and C to D. And now we're looking for the 886 retracement. And there you go. Front run it a little bit. You're in right there. What a sweet trade, right? And what are we looking for again? B point. You see it comes down into this B point. So again, this is ugly. The wings, you know, like sometimes I look at the wings. I like the wings to be the same size. I like that. That just makes me feel good inside, right? but sometimes it's just not like that. Sometimes you're going to get this huge left wing, and then the right wing is just really tiny because you have this little run up, but it's going to fall at the 886. And so, I mean, that's such a great, like, let's look at that. Let's see, what are the, this wouldn't be a stop, but we'll just use that for percentage. Yeah, 19% gains. This is on the hourly chart, by the way. So that's 1, 2, 3, 4, 5, 6, 7, 8. 8 hours. You made 19% gains. 19% more Bitcoin by shorting this. So that's just one scenario I wanted to give. Sometimes these bat patterns are ugly, but they still work. And so really, you just have to decide as you go through and see which patterns, like if you don't like ugly patterns, you may be like, well, that's a little ugly for me, so I'm not going to trade it. But you would have missed out on 19% gains, right? But you got to be okay with that. You got to stick to your guns too. So, okay, let's look at a few more examples. Okay, this is Ethereum Classic. This is actually a trade I'm in right now. I want to give some up-to-the-date examples. But the reason I want to use this is because, okay, if you look at this, we got this nice strong move up. And remember, you go all the way to the wick. So it did touch up there, comes back down for our B point, our middle point here, goes up to C, and then has this nice leg down at D. And our entry is right around here, right? But you see it falls past. And there's sometimes it's going to fall past and go all the way to X, right? And then start turning back around, which in this case it has. Now, really, I don't even think I'm in the profit on this one yet because it hasn't reached my original entry point yet, although you see it starting to move back up. Well, one of the things I just wanted to mention this because this will happen quite a bit is you're really looking, sometimes some people want to look at this, let's get a box out here, as a kill zone, right? Especially when it's coming down quickly. And I'll talk about the PRZ, which is the price reversal zone, in other videos. I don't want to, that's a whole nother 30-minute segment right there. But you can see, and I put boxes on, you know, before this trade looking at kill zones. But this is your 886, right? And and then you have your X right here. And you see this reversal in here coming up. And there's a lot of times it will hit your 886 and go down and keep going down. You can't freak out and get out of your, that's why you set your stop and you leave it where it's at, right? You can sometimes adjust price targets based on price action, but you never want to move your stop. It's below X, right? If it breaks this, like on this trade, if it comes down and falls below this and comes down here, I don't want it anymore. I'd rather hold Bitcoin than Ethereum Classic because I know it's going to outperform it. So that's just one quick thing I wanted to say because this will happen a lot. But a lot of times it will hit this, it'll fall. The 886 is not going to be exact. I showed some examples where it stopped on a dime on the 886 and turned around and went the other way. That's perfect, right? That's what you want every time, but that's only going to happen maybe 2 or 3 times out of 10 trades. Maybe 2, let's say 2. But, you know, the other 7 or 8, it could go past it for a ways and then go back up. But you're in, right? And you want to stay in and stick to your guns there. Okay, so this is another example of the bat pattern with one thing that's going to happen, which is it doesn't come all the way down to your target. And it's so frustrating, right? So say you were front running this and you're right here, and this at this D point here, and you just miss it, right? You just missed it, and it comes up like that, sucks up, and then it eventually ends up hitting your B point up here, right? So that will happen quite a few times, and you just have to let them go. I never chase a trade, because say I get in like around here after this candle and I'm like, man, this thing's going up, right? I get in right here, but I'm only looking for a B point right here now, and my stop loss still has to be back here. So I throw off my risk reward ratio pretty severely, and it's just not worth it at that point. You need to get in at your entry, because that's your lowest, that's your best point right there. And sometimes it will just miss it, but that's okay, because there's so many more patterns out there. You'll find another one, and you have to be okay with it. And once you start seeing all the bat patterns that pop up, you're like, even when you take losses, you're like, well, I'll just find another one that works. That's the beautiful thing with it, especially when your losses are small, is you're okay with it. Okay, let's look at Ethereum. Okay, so this is something that I'm looking at currently. This is a bat pattern that hasn't played out yet, but is working its way up there. So if there's either two plays on this, right? I can either have had Ethereum and been sitting on it and looking for a good exit point, or be looking to short the market on Poloniex at this level right here. Okay? And that's what I'm looking for right here. You see, you got this leg down. Now look, it's choppy, right? It's coming down like that. It's not the perfect leg down, but it is this leg down, X to A, and when you zoom out and look at it, it's just a leg down. If you zoom up and you see, zoom in here and look at all this movement, it's kind of ugly, right? But it does come up into this B point here, comes down to the C, and the wings are pretty even here too. So what I'd like to see is this move up here, and at 377, 378, shorting Ethereum. Again, but if we're wrong and Ethereum's going to all-time new, look, this is why I like this trade too. This is an all-time high at this X point, right? And I think Ethereum, I've got Ethereum outpacing Bitcoin in September, but right there, if it goes, much past that, I'm out, because I think Ethereum's going to start blowing up to, 450, 500, 600 bucks. But I'm watching it right now going up into this area of what I think will be resistance. And you see, we have some kickback right here. It kicked back here. Not a lot. What we're really playing off of is this X right here. So it could go past the D point like it did on Ethereum Classic, go up like this and kind of come back down and roll back around, and then we'll be looking for a target. We might not take the B point on this, because it might not come down that far. We might just take a Fibonacci retracement, like a 382 or something like that, which I'll talk about taking targets in another thing, because that's really important as well. Anyways, I hope that makes sense. That is the bat pattern there, and yes, I could go into more detail on it, but and I may end up doing a kind of a live thing where people can ask questions, because I'm sure there's a ton of questions. And really, honestly, if you have a lot more questions after watching this, that might be a good thing, because that means you're starting to think about it, and how does it work, and wait, if this happens here, what about this scenario? And that's this. I did the same thing, and I ended up just working it out. Go back through all the tick data in the charts, scroll back through the charts and go look and see, okay, are there any bat patterns back here that I can look at, and see if I can find some. See the ones that failed, see the ones that worked, look at the profits, see what you would have made. That's kind of encouraging to look at. But I'm telling you, with this, if you do the same thing over and over again on these bat patterns, it ends up being really profitable. Feel free to ask questions. If you have any questions, comment below. let people know about this channel too if they want to trade. I'm not super concerned about having 40,000 subscribers or anything like that. I'd rather take 100 really good traders that actually want to trade and actually want to be serious about it and make some money, not some people that are looking to catch the latest pump and dump or the latest ICO or whatever. I'm looking for people that want to get consistent gains, that want to make their 1% a day for themselves and not have to trust it in the hands of other people or anything like that. Because this is just to me, one of the safest ways to trade and one of the really less risky ways to trade. And also, if you just get consistent, it's one of the most profitable ways to trade. So I hope that helps you guys. I know it's kind of a longer video, but I wanted to explain as much in detail as I could. Let me know, guys, if I didn't explain something good or you have a question. Don't feel free to ask. You're not going to offend me. This is my first time really, other than with like private, just one-on-one stuff. This is my first time teaching this, in a video like this. So let me know if you have any questions, and I'll check in with you guys next time.